Now, if you're like myself and you're a fan of the JP Morgan Equity Premium Income ETF or ticker symbol JEPI, and this is because you want some more exposure to the S&P 500, but also enjoy utilizing the cover call strategy that it uses to generate a ton of income on a consistent basis, well, then this is going to be the perfect video that you came across, because in this video, we're going to go over another similar yet different S&P 500 cover call high income ETF that utilizes a similar strategy to that of JEPI, but does it even better, at least in my opinion. So if you want to dig into the cover call style ETF that's not only outperforming JEPI, but also the cover call style ETF that I think is going to be better long term, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go through this newer cover call style ETF that also utilizes the S&P 500, a cover call strategy, and generates a ton of income, just to lay some groundwork, JEPI, the JP Morgan Equity Premium Income ETF, says right here as far as an overview goes, just so we can compare this to the new ETF. It says seeking consistent premium income with lower volatility, and the portfolio says defensive equity portfolio employs a time-tested bottom-up fundamental research process with a stock selection based on our proprietary risk-adjusted stock rankings. But with this discipline options overlay implements written out of the money S&P 500 index call options that seek to generate distributable monthly income. And to be fully transparent, I do own a ton of JEPI. I think I have around 1,200 shares across all my portfolios combined. And to be real, at least during the time frame that I've held on to JEPI, there's really not all that bad I can say. This ETF is traded mostly sideways, maybe up a little bit from my cost basis, and paid me anywhere from around 36 cents, 42 cents, and everything else in between on a monthly basis per share since I've been holding on to it. But I will say the fact that JEPI only offers around a 7 or 8% yield for an ETF that at one point was offering much higher did sort of get me thinking a while back that I probably should look for different cover call style ETFs if they're out there that also utilize a similar strategy to that of JEPI, but maybe does it even a little bit better. Which brings me into SPYI, the NEOS S&P 500 High Income ETF. This ETF, like I said, not only has outperformed JEPI, but also over the long term, I personally think that this ETF is going to do much better for several different reasons, which is why, as of right now, currently, I'm buying a ton of SPYI, and is why I have not bought a single share of JEPI, another single share at least, in quite a while. Now, it says right here in the NEOS website, targeted benefits of SPYI's strategy. Number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index, so similar to that of JEPI, and implementing a data-driven call option strategy. So once again, very similar to that of JEPI, but let's read on. Actively managed by NEOS, so this one is actively managed. The fund seeks to take advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. The fund utilizes a call option strategy that may include both selling and purchasing SPX index options, which may provide the opportunity for upside capture in rising equity markets. Now, this is probably the biggest portion of the targeted benefits that I was a huge fan of. The fact that sometimes, depending on what the actively managed managers are going to decide on, they could also buy call options, which obviously could give us exposure to some potential upside as holders of SPYI. But also, as we read about, this ETF is going to be rather tax efficient, which again, everyone's in a different situation. Maybe taxes are more or less a problem for you. Again, maybe you're doing most of your investing in a tax sheltered account or a taxable account. So it really depends on your situation. But for me personally, the tax advantage strategy that this ETF employs is a huge benefit for me. Now, some more stats about SPYI. It is much more expensive to hold on to than that than JEPI. It's 0.68%, so just about double the expense ratio. But again, due to the performance, I don't really think it's too big of an issue. The AUM is around $2 billion, which is crazy considering this ETF is relatively new. It's been trading since 8/30/2022. Now, another thing to look at when it comes to SPYI, the 12-month trailing distribution rate is 11.8%, or the current distribution rate 13.2%. So this ETF, although it has a very similar strategy to that of JEPI, it's offering much more yield, at least as of right now. And this is due to the fact that basically every single month, more or less, SPYI has been paying out more or less 48 to 50 cents per share per month. And again, the tax efficiency, the fact that most of the capital that's paid to us is in the form of ROC, or return on capital, means that it could potentially be very tax efficient, and that's another reason why I love this ETF. But digging a little bit deeper into both JEPI and SPYI. On the max time frame since around May of 2020, JEPI is up around 17-18% as far as price return goes, which is not bad whatsoever considering most of us are buying into JEPI or bought into JEPI for the high yield nature. So for that reason, 17-18% is not bad whatsoever, and I've been very happy with it for the around 1,200 to 1,300 shares that I'm currently holding. Now SPYI on the other hand, at least as of filming this video, is up around 4 or 5%, and this is since about August 2022. So it's sort of hard to compare the two because they haven't been trading for the same exact amount of time, but overall they're both in the green in the max time frame. One pays a much larger yield than the other, but still long term because of the strategy that SPYI employs, I think this one is going to do much better, at least if we're talking on a total return basis for the say next 1, 3, 5 years. Now, even though JEPI and SPYI, like I mentioned, have not been trading for the same exact amount of time, if we were to stack up both of these next to each other, and again, not saying that these ETFs have the same strategy, but again, they're somewhat similar. If we were to use a start date of 8/30/2022 and compare both of these ETFs, invest $10,000 into each of them, and reinvest the dividends along the way, if we were to compare these two, SPYI would have had an average annual total return of around 13.37, JEPI around 12.36. As far as total return altogether, 29.18 for SPYI and just under 27 for JEPI. So even though these are both very close, even though over the last 2 years, either one of these covered call style ETFs have actually been pretty good for investors, and like I said, I'm happy to say that I own both, SPYI, because of the strategy over this time frame, pulled ahead just by a tad over JEPI, which is at least somewhat notable. Now, I've made it very clear that by no means am I saying JEPI is a bad investment, and by no means am I going to sell any of my shares of JEPI moving forward. But like I said, just as far as looking forward, that is, I think SPYI, the newest S&P 500 high income ETF, if you want exposure to the S&P 500, if you want exposure to a data-driven call option strategy, and again, if you want to do so in a tax-efficient manner, I think this ETF, at least as of right now, as far as I know about, could be one of the best S&P 500 high income ETFs across the entire market, unless of course I'm missing something very obvious. What SPYI is, exactly how this ETF works, and sort of more or less why I'm so fond of it, along with all the numbers including the dividend and the fact that this ETF has returned around 12% on average over the last year. Because this ETF costs roughly $50 per share, and because this ETF pays roughly 48 cents on a monthly basis. Every single day, more or less, over the last, like I said, few months, I've been buying roughly 2, 3, or 4 shares of SPYI, and some days, of course, a lot more. But on average, my mindset is that if I just add 2, 3, or 4 shares of SPYI to my portfolio every single day with cash balance that I have in my portfolio, and the cash balance, of course, is coming from dividends from all the other stocks and ETFs across my portfolio. On a daily basis, if I consistently buy 2 to 4 shares minimum of SPYI, that's going to give me forward an extra $1 or $2 in dividends paid out to me forward over the next month. Now that's basically the motivation and mindset that I've had as of recently to keep trying to get as much money into the portfolio as fast as possible to let SPYI really generate more income to the portfolio, which it definitely has been so far. So now that we dug into and talked about SPYI, my newest favorite S&P 500 high income ETF, an ETF that I've been buying like crazy over the last year and that I'm still buying to this day, I lastly, most importantly, want to hear from you guys down below. When it comes to S&P 500 exposure in the cover call strategy world, what's your #1 favorite cover call style ETF? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.